Justin, this has been a long time coming.
Steve, I've been looking forward to this ever since we exchanged some emails earlier in the year. Been looking forward to it. So thanks for having me.
Yeah, well, I am thrilled to have you here. I've been watching you from afar here for the past few years, and you're pretty prominent on Twitter and in the industry and gotten some national recognition in some of the trade periodicals. And you're doing a variety of different things, one of which is the whole crypto route that you're on now with Onramp Invest. So really that's where we want to focus our conversation here today. So I'd love to start with you sharing a little bit of your crypto journey. So how did you get into the crypto space?
For sure. Before I get there, first, I just want you to know that the recognition, the publications, like those things are cool. And this is more for younger advisors out there, but to have the opportunity to come on a podcast like this, to me, this opportunity, some one-on-one time with you is more valuable, more meaningful than those top 10 lists and things of that sort. So this is super cool for me because you're somebody that I've followed for a number of years early in my career on. So this is meaningful to me and super exciting. So just want to thank you again for the opportunity. I'll get to the crypto conversation.
Thank you for that.
Yeah, definitely. My journey into crypto started back in 2017. It actually started, I want to say back in 2015. I had a friend of a friend ask me about Bitcoin. And at that time I knew nothing about it. And it was the first time I'd ever really heard of it. And just told him I didn't know anything about it and really couldn't give him any advice. And that was the end of it. And obviously I wish I would have started my journey at that point, but that was when I first heard of it. But 2017, I started to do my own research. And it was before the big run up, which I'm kind of proud that I kind of dove into the space before it really got exciting at the end of the year. And I just realized that I was hearing more and more about it. And I felt like I needed to be able to at least answer clients' questions and direct them to different places. So my goal was just to learn the very basics and then be able to direct people to good resources where they could learn more. And as I got into the space and learned more about it, I read Blockchain Revolution, which was a book that kind of opened my eyes to the possibilities and what really made me dive further into the rabbit hole. And there's a quick story in that book that really opened the part that opened my eyes was this story about a woman who would walk 3 miles to send money back to her family and her homeland through Western Union. And it would end up costing her 30% when it's all said and done. And I understood there was high fees for things like that, but the aha moment was that 30% would have bought her family another week's worth of groceries. And then that was when I started to realize that this is bigger than investment. This is money moving across the globe and impacting people in ways that most of us in the US can't understand. So that was what made me want to dive further into it and begin to learn more. And then the exploration is just, you continue to read and then you open an account, you buy your first little bit of Bitcoin, you send it to a wallet, you just have to experience. For this type of stuff, I have to learn it. And I just learned in public, which is something I'm very comfortable with doing. And because I was writing about it and I was sharing what I was learning, people began to ask me more questions and it just kind of pushed me further in that direction. So I think that my journey is not so different than many's. It's you learn a little bit about it, you experiment with it, and then you keep going. And I honestly kind of put that on pause for a while as I focused on my RIA and focused on the AGC community that I launched. And then I saw it coming back up again and started getting back into it. And then my friend Tyrone Ross became the co-founder and CEO of Onramp and was just hearing all the exciting things they were doing there, and ultimately decided that for the next phase of my career, I actually wanted to put my RIA growth on hold and kind of freeze that and go help Onramp build this platform for advisors and be an advisor on the inside who can help make sure that this technology platform is built with the advisor in mind. So kind of funny that I would have never imagined that this would be something I'd be doing, but it's just, as I look back, it's not surprising as I learned and experimented and kind of went down this path that everything I was doing and learning was preparing me for the opportunity to go work alongside my friend at Onramp.
So you're in the minority. And what I mean by that is here in the United States, there's several 100,000 financial advisors, and only some relatively small percentage of those advisors are open-minded about Bitcoin, Ethereum, and other crypto out there. What do you think it is about you, whether it was your upbringing, whether it was your mindset, that made you open to the idea back in 2017 when you started getting a little bit serious about Bitcoin? What is it about the way you think that you think made you open to the idea of this when so many other financial advisors, even to this day, are saying, they're just not going to touch it with a 10-foot pole?
I'm naturally curious, so that's part of it. But I have this desire in me that really came out when I launched my firm back in 2015, that I want to shake up our profession. And I don't want to avoid things because everybody says you're supposed to. So not that I necessarily want to go against the grain, but I don't want to miss out learning something because they say you're not supposed to do that. And maybe there is a little bit of me that if you tell me I shouldn't do that or we shouldn't be looking at that, then I want to do that even more. So I think that it's those two combinations of just naturally being curious and then wanting to go against the trend and not be like every other financial advisor is what led me down that path. And then again, once I started to understand the opportunities, that's when I thought, okay, this isn't going to be going anywhere. And then over the last couple of years, you see the growth that's happened. You've seen the talent that has come to the crypto space. There's a lot of money and a lot of talented people who are leaving very good careers in other technology spaces to come work in the crypto space. So yes, I do think there's a lot of excitement that is unwarranted, and maybe it's a little bubbly when you look at NFTs and where things are today in September of 2021. But at the end of the day, I really do believe that this technology and what's going on in this space is going to change the way that finance works and ultimately the way that advisors are working with their clients. And I want to be ahead of the curve. And I also want to try to encourage other advisors to be ahead of the curve as well. So if I can go out and do some research and learn about some things and then come back and report to my peers and say, hey, you should really be paying attention to this, do your due diligence, head in this direction, then that's one way for me to shake the profession up, is if I can get more advisors forward thinking. That's why I have the podcast as the advisor of tomorrow. Like, what is the profession going to be in the future? And it's not just only investment in kind of crypto, it's where is planning going, what's financial advice going to look like. But I always want to be looking forward, and I don't want to be caught up being stuck in things that have always been there forever. So I think that's part of the mentality that's kind of led me that direction.
Well, and I think that's a fantastic way to look at it. And I think the same way as well. I remember with my Between Now and Success podcast, the first show I did on, well, it wasn't technically focused on Bitcoin. It was more on blockchain, because back when I did it in 2016, it was the thing was blockchain, not Bitcoin. Mm-hmm. And so I did a show back then. And not long ago, I went and I looked back and I said, when I published that show in 2016, I wonder what the price of Bitcoin was. And that day that I published it, it closed at like $570 some. And now it's close to 100 bagger since then. Of course, I mortgaged the house back in 2016 and put everything in there on margin. So I'm doing fine. Just kidding. But let's go to 2017. So that's when you said you first started getting a little serious. Did you have any clients that were asking you about it, or prospects asking you about it back then? And then let's flash forward to today. What kind of interest do you see from the general public, the kind of people that you as a financial advisor interact with? So maybe go back to 2017 compared to where we are today with the public interest in it.
Yeah, in 2017, most of what I saw was clients asking me questions. Like, they were just curious. What is this? Should I be paying attention to it? How does this fit into my plan? And it's just general questions. And they were asking because they knew I was researching and learning about it, because I was putting it on my blog, and they get my blog every week. And then in my office, I have it kind of decorated to show my personality. So I have some crypto things in here. Stock Twits put out a real cool poster that had like Bitcoin, Ethereum, Ripple, and some of the hot ones back then. I have that framed. So I had things around that let them know I was interested in learning about it, but I also wasn't telling them they had to be spending time on it. Because at that time, I felt like if you wanted to, dabble in a little bit, I looked at it as individual stocks. Take a little bit of money. If it blows up, we're not in trouble, but you got to experiment in it. And if it does well, that's awesome. So it mostly was that. I didn't really have a lot of inbound questions from prospects at that time. But it wasn't in 2021, but in 2019 and 2020, I still had some of that out there. I was beginning to talk about it again. I did have some clients that actually joined the firm as clients, knowing that I couldn't actually help them with their Bitcoin. I couldn't help them with crypto, but they liked the fact that me as a financial advisor was willing to talk about it, that I was looking at this new technology, that I wasn't dismissing it and talking negatively about it because they believed in it. So again, I'm to this day just now starting to be able to allocate to crypto and see it and advise on it thanks to Onramp. But I didn't even have to be doing that. It was just the willingness to talk about it, the forward thinking to learn about it and share, that was actually received well by prospective clients. And they're ideal clients for who I wanted to work with at the time. So And I would only imagine that if I was trying to actively grow, I would be getting more and more questions from prospective clients in that space. Because I recently purchased my first couple of NFTs, and I wrote about that experience and shared that out there as well. Again, I did that for my own personal knowledge. How do you go about doing this, and wanting to share, here's what the process is. And more importantly, here are the obstacles and things you need to be careful about. I did the same thing with Bitcoin and ETH. Here's the things you need to be careful about, because it's a different experience. But I also don't think that you should shy away from it just because it's different from what we're used to.
So you're a financial advisor, and you're also an executive at Onramp Invest, which is a firm. And we'll talk more about Onramp here in just a little bit. So you really have it from both sides as an advisor, a practitioner, but then also as someone who's in the space, in the business. So as you think about what a financial advisor should be doing right now as it relates to crypto, and I'm just going to, some people get hung up on, whether you say Bitcoin or whether you say crypto, and Bitcoin's not crypto. I'm just saying crypto period as a name for all of this stuff. So how do you think a financial advisor should be thinking about the crypto space right now in terms of, well, I guess let me just stop there. What do you think they should be doing or thinking as it relates to crypto right now?
99% of advisors today, when it comes to crypto, should just be thinking about educating themselves, and then educating their clients. Most advisors probably shouldn't be allocating to the space. Most clients probably shouldn't be putting it in their portfolio. So at this point, it's kindergarten, just learning about the space, understanding the different terms, hot versus cold wallet, on-chain, off-chain, all these terms that are very important to understand before you even get to allocating to it. So I just think it's education at this point. And then, Tyrone always says, you got to baby food before steak. So you just got to kind of ease your way into it. You can really do a lot of help for your clients, even if it's clients having it held away from you. Once you begin to understand the nuances of the crypto space and the opportunities for planning, whether it be estate planning, tax planning, making sure that your clients are aware of if they're buying it on a Robinhood or a PayPal, that they don't actually own those magic keys, which means they can't move it off of that platform. And if you think about the long-term planning opportunity there, if you have a client who's been buying crypto in the last couple of years and it's all been on Robinhood, and one day that amount grows to where they want to move it somewhere else, move it to a private wallet, do something else with it, they can't move it off. So unless they change things in the future, the only way to get it off of Robinhood or PayPal is to sell it. And that could be a lot of taxes that could have just been avoided if you had your client buying it on a different exchange to where now it's portable. That doesn't require you to believe in it. That doesn't require you to be trading it. That just requires you to understand the technology and the nuances to the space. That is just a little bit of reading. That doesn't take very much time to get those nuances down. So I think most advisors at this stage should just be education, be able to answer questions, and be able to prevent their clients from making bad mistakes, which is the same thing we do on a lot of other areas of their financial planning. It's just understanding those things and guiding them away from the ticking time bombs.
Well, since we're talking about education, tell me just briefly about Onramp Academy. So that's one place to get education. And then tell me some other places that you would recommend financial advisors go to if they want to get educated in this space.
I appreciate the opportunity to plug Onramp Academy. And Carl Richards has this saying that I always say, and I butcher it, but I don't feel bad plugging it, because if you believe what the work that you do can change people's lives and help them, then you have an obligation to tell them about it. And I really do believe that Onramp Academy for advisors, and then ultimately their clients, will help them. So Onramp Academy is a part of the platform. It's actually a part of the platform that lives on its own, that you can just subscribe to that on its own. It is a compilation of tools and resources. We have fact cards in there. Onramp employees and advisors are doing a lot of the content creation, but we also have a lot of partnerships with companies like Galaxy and Barnbridge and a bunch of other companies that are in there helping us create that content. So for example, Barnbridge lives in the DeFi space. They helped us write I believe it's a 7-part series on DeFi, decentralized finance, which falls under the crypto space, but it's totally different than Bitcoin and ETH. So the goal is to build out a resource to where you as an advisor can go get the educational pieces. We have the 101s. What is Bitcoin? Explain Bitcoin to me as a 5th grader, but then begin to build your education up and get further into the space and your knowledge base. Those pieces can be white labeled so you can use them with clients. One of my favorite pieces I've talked about before, we have an Onramp's Guide to Crypto Assets. And I was very particular because I want that to sound like JP Morgan's guide to the markets, because it's exactly like that, except it's all crypto. It's got the graphs and things you can use to not only educate yourself as an advisor, but you can open it up and show a client, help them visualize why you might want to pay attention to the space. There's tools that will allow you to model, what is a 2.5%? What is a 5% allocation to Bitcoin do? Just again, to understand why you might want to spend more time in the space. What could it do? I always get frustrated with advisors that want to downplay those types of tools, especially when it comes to crypto, because it's the last 12 years. So yes, it's only a short amount of time. It's backward looking. And we know that the past performance doesn't predict the future, but it's the same thing we would do if we were evaluating a new small cap fund or a new emerging market fund. We're going to run it through Morningstar. We're going to run it through another tool, see what it would have done to our portfolio, just to have an understanding, and then check our forward thesis. It's the same thing, but for some reason we want to discredit what we use in other areas of the profession when it comes to crypto. And then you can even go and build in your own model portfolio and put Bitcoin and Ether in there to see how does that change things out. So Onramp Academy is just a big part of what we believe in at Onramp. We have this acronym: EAT, educate, access, and tools. We start, it's EAT, it's not 8. If we don't end with education, we start with education. And we wanted to make sure that we were bringing that education to clients, or to advisors. So it's just a place to learn. And then we will continue to add to that as the space evolves, bringing more resources. And one other area I want to mention on the Academy before I talk about some other resources, we also have practice management in there as well. ADV language. What do you need to think about when it comes to E&O insurance? Checklists for what should you be doing from a compliance standpoint, checklists for what you should do with clients. So it is education, but also practice management in there as well. We want it to be the primary resource for advisors when it comes to crypto.
Now, is there a price on that, or how to?
Yeah, it's $50 a month. So there's a 30-day free trial. You can get in there, you can look around, you can read things, check out the tools. And then after that, it's just $50 a month. So you don't even have to be on the platform to be buying and selling or seeing held away assets, which is part of the platform as well. You could just do Academy on its own. And we're seeing a lot of advisors that just do the Academy. And what I think will happen is they dive in with the Academy first, much like I did my research on my own. They get comfortable with the space, and maybe they open their own account. And then they get their first client who says, hey, you've been talking about Bitcoin. I actually have a Coinbase account that I started back in 2012. And it's got $100,000 in there. I never told you about it before because I didn't think you'd want to know about it. I would love for you to help me look at that. And now they can patch that in and see that. And they get comfortable seeing and understanding how to incorporate it. And then the final level is they might want to allocate to a handful of clients in a 2%, 3% allocation. The cool thing is a small allocation historically would have meant meaningful returns and meaningful volatility lessening to the portfolio. So right now, and maybe this changes as the space grows, a little goes a long way. And I hope more advisors just get comfortable with that. Moving outside of the Academy, once you figure out how to navigate social media like Twitter, there's a lot of great information out on Twitter. There's a lot of, crypto maxis on there, that Bitcoin's everything and solves the world. But once you begin to filter through and you find out who really is genuinely knowledgeable in the space and building good projects, you can find a lot of great information out on social media, on Twitter. Beyond that, I think there's good books. One of our favorite ones at Onramp is Crypto Assets, which is basically a book that kind of goes through crypto assets and the different types of coins and tokens that are out there and what differentiates them. I would encourage people to go back and read Blockchain Revolution. I think we're beyond the blockchain versus Bitcoin conversation, but still, to me, that book really told the story of why blockchain plus Bitcoin is a big deal. And I think a lot of us have moved on beyond it's not Bitcoin, it's the blockchain. I think Bitcoin and Ether and some other coins that are coming around are showing that they're not going to be going anywhere. So I think those two books combined with finding and filtering out on social media are some great places. Podcast wise, Tyrone has a great podcast called On Purpose, which is for advisors and it's in the crypto space. So I would look at that. And then CoinDesk has a lot of great resources as well. So I think those would be a good starting point.
Yeah, we've got Interaccess with Adam Blumberg, and I know we've had Adam on the podcast before. They've got some nice training materials and an actual course. Rick Edelman, he's got an organization. What do they call it now? The Digital Readac. At one point, I think they changed the name, but
yeah, I forget what they changed the name to. And I should have mentioned Interaccess. We're friends with Adam. We actually sponsored, I believe it was 20 advisors to go through the CDAA certificate they have. And I haven't gone through it myself yet. I need to, but everybody that I had, a lot of friends that did it, they all thought it was great. So again, I don't know if you go through the CDAA to put it up there next to your CFP, but I think from a knowledge base and just knowing you have a better understanding, whether you use that as a marketing tool to differentiate yourself, I don't think you have to do that. I think you just get a good base understanding of this whole space.
Okay. So the key is for advisors to get educated about this.
Mhm.
And we've got a number of resources that we can do that with. Let's talk about Bitcoin specifically now here for just a little bit. Tell me how you would describe the bull case for Bitcoin and then also the bear case for Bitcoin.
I'll go bear case first, which is not usually how I am. I'm usually the optimist. I think the bear case to it is still relatively new space. We don't know regulatory how things are going to fall for it. Right now, it is regulated, but it's not. You have different organizations viewing it as different things. There's still a lot of unknown to it. And then what could government do to the crypto space? I mean, in theory, they shouldn't be able to do anything because it's decentralized. How can you shut something down that there is no governing body? But at the same time, they can kind of do some things to the rails, meaning the money moving in and off of a Coinbase or even an Onramp, they can put some parameters there or some obstacles there that may change the adoption of it out there. I think that the bear case of, could it be hacked? I believe it would be very hard for Bitcoin to be hacked because of the whole 51% override that would need to happen. And you have this network of nodes of miners on this digital blockchain that don't know each other. So to get 51% of these unknown people to conspire to overthrow things, I don't think that is really a major concern. I don't know if it necessarily would be a bear case, but it would be an obstacle or a negative for advisors. Is just security issues, exchanges being hacked, wallets being hacked, people losing their passwords, things of that sort. That's another obstacle that I think would throw in the bear camp. But I think that when you shift at the future and the opportunity, and if we're looking at Bitcoin itself, I still to this day struggle of, is it a store of value? Is it digital gold? I pull a lot of, I get a lot of my information and influence from Tyrone because I respect him so much. And he's been an advisor in the space much longer than I have. And he doesn't like to view it as digital gold. I understand the case to it. And I also think that if enough people view it as digital gold, enough young professionals view it that way, then that's what it becomes. So I do think that it could be that case that instead of having gold as this inflation hedge, that people are investing in Bitcoin for that. I think today it's still it's a call on the future. I think it's a long-term play. You view that there are more and more institutions buying into this space, and it's still really early on because not every institution has. You've got, insurance companies and other big institutions that are putting this on their balance sheets, but still in the grand scheme of things, it's very small. So if you believe that Bitcoin will be adopted as this store of value that businesses want to hold it on their balance sheets, then if you're buying it today and more institutions buy it in the front because in the future, and it's got this fixed supply, then that will be it should go up. So I think that because it's still early on, even though those of us that have been paying attention to it for a while don't think that it is early or may not feel early on, in the grand scheme of things, it is. It's very, very new. So the bull case of it is it's still just getting started and there's a lot of adoption to come. And as I think through on the fly, another bear case to it could be that something better than Bitcoin comes along and people move to that. So a lot of the newer coins are being built on the Ethereum blockchain and they're kind of improving upon Ethereum. So I don't know if that threatens Bitcoin because it's very different. Bitcoin has the fixed supply, it's proof of work, and we're getting proof of stake in other areas, and they have different use cases. So I think that because Bitcoin was first, that gives it a little bit of staying power. It has a little bit of a moat around it, that I would still lean towards the bull camp over the long run being worth the bear case arguments.
So you mentioned that you don't necessarily look at Bitcoin as a digital gold. And a lot of people use that as really a shorthand way of using the gold analogy because it seems to make sense. There's basically people will say everything that gold does and can do, Bitcoin can do better. because of its digital nature and its deflationary properties and its cap at 21 million, so on and so forth. So if you don't view Bitcoin as one of its functions being that it is, quote, this digital gold, what do you think Bitcoin is?
Well, first, I understand the gold argument, and I wouldn't tell somebody they're wrong for thinking that. I think of it as, I think it's bigger than gold. I think there's more to it. I think the digital gold, here's where I want to go. I think the digital gold story makes sense in the US because I think that our currency is strong. Our government, at least right now, isn't messing with our ability to bank. But when you move beyond the US, I do think more people will transact with Bitcoin. So most of us in the US are buying Bitcoin and we're hodlers. We're holding it for the long term. We're not buying things with it. I think anybody buying a Tesla or buying anything with their Bitcoin is silly. You shouldn't use Bitcoin to transact. I think the companies that are offering that as a way to accept payment are one of two things. It's a marketing tool, or they realize that Bitcoin has a big future and let's just get it from people.
They want to get your Bitcoin.
Right, exactly. So I think in the US, maybe there is more of a case that it is a true digital gold. But again, when you go further out and you go to, Venezuela and other countries where, monetary supply is not good, government is corrupt, then using Bitcoin to transact and send people money, and it becomes more than gold. Because most people aren't sending their family gold, but in other countries, they are using Bitcoin to send value to other people. So I think that because it has a stronger use case as more of a currency or an exchange of value outside of the US is what keeps me from viewing it holistically as a digital gold, because other people are using it for other ways. Across the world, no one's using gold to exchange value with their family members.
Yeah, well, clearly Bitcoin transcends just the idea that it's digital gold. It clearly has lots of other uses for it, which does raise an interesting question for a financial advisor, which is, a lot of financial advisors don't view gold as an investment either. And so only a small percentage of financial advisors are going to allocate anything to gold in their portfolios. And so if you, and I'm saying you generically, if there's this idea out there that a lot of people don't view Bitcoin as, quote, a digital gold, and maybe it's a payment rail, it's a way for people to store value and to easily move value that can't be confiscated by a government and some of these other properties, then what's the case for a financial professional to allocate to Bitcoin if it's not, quote, an investment in the traditional sense, meaning it pays no dividend, it has no cash flow, it's not a business, it's just number goes up because it has a fixed supply of 21 million. So how can a financial advisor in good conscience, and I'm playing the devil's advocate here. I'm an advocate of Bitcoin, but I want to play the devil's advocate here for a second. How can a financial advisor in good conscience say to a client, I think we need to put 1 or 2% into this?
That's a good point. And I think that a lot of us end up talking out of both sides of our mouth, because part of the reason to have it is it does have those characteristics of gold and the inflationary metrics against it. But I also think that the opportunity for long-term price appreciation makes it like a growth stock. I'm not expecting any dividends or anything back from Tesla other than I'm buying Tesla because I think it'll be worth more in the future. So what makes Bitcoin worth more in the future is partially tied to the fixed value, which is what ties to the inflation hedge. So I think that's why it's hard for advisors to wrap their heads around it as well, is we're so used to definites. We know that a large cap stock is this. We know that a bond is this. And this kind of has this multi-asset class type of blend to it. And it's new and it's different. So it makes it hard. And I think if somebody could articulate exactly this is why, and I'm not doing a very good job of it. But I think that the comfort in offering it is, I know that it has these metrics to it that we can tie gold as a commonality to it. So I know that it's got those features to that, and it's reasonable to expect that it would have similar type of effects on a portfolio as gold has in the past. I'm one of those advisors that have no gold in the portfolio. And now here I am saying that in the future, I'll have Bitcoin for clients in their portfolios. Now it won't be across the board, but it'll be right risk tolerance and situations along those lines. But I think of it more as I've got that inflation hedge in there if I need it, but I also have this long-term call option that I think on this space and this technology that Bitcoin will go. Now, it could get to a point in 10, 15 years that Bitcoin becomes less of a call option and it really does shift to that digital gold, because now we're closer to the 21 million. I mean, it's not going to be till 2140. So we're all going to be gone by the time the last Bitcoin is mined.
Maybe not.
I don't. As much
I think
as
you want to live forever, right? Didn't I see that on your website?
Yeah, I want to live to be 100. I want to live to be. I want to live to be I want to live to be an active, high quality life at 100. If I'm
well, if you can live to 100, the technology will be in place where you'll be the $6 million man, and we have the technology.
Exactly. But as we get closer to fewer Bitcoin being mined, then maybe the appreciation opportunity out there declines, and there's more options out there. So I definitely didn't answer your question and give you one that we could take to the bank and say, this is why advisors should view it as something that should be in the portfolio. Again, I think going back, most advisors probably shouldn't be putting it into portfolios today. And I think that there's the place for it. I also think it's for the right client. I don't think every client needs to have it. It's got to go into risk tolerance. And I've kind of changed my mindset over the years. I've been an advisor for 17 years now, which is crazy to believe, but I've gotten to the point where I've shifted this mindset that we don't have to be only index funds. And if clients want something in their portfolio within reason, I don't think it's a bad thing to put it in there. Now, as an advisor, we've got to maintain control of the plan and of the relationship. But if a client comes to me and says, hey, I really believe in this technology, I want to have it in my portfolio, I want some Bitcoin, I want some ETH. If we can fit into their portfolio, we have a discussion about it, and that makes them stay with their portfolio over the long run. It makes them stick to their financial plan, and it's an amount that doesn't cause a big problem, then I don't have an issue putting that in. And that may be the direction that some advisors go, is I don't want to recommend it, but if a client wants to have it in their portfolio, I'd much rather them do that with me, so I know what it is and I can help them and carve out an amount that doesn't cause any problems to the portfolio, and then be able to rebalance. If it keeps on growing like it has, we're going to need to rebalance regularly so it doesn't become too much of the portfolio. It's still very early on for advisors putting it in there and how exactly it's going to play. But again, I think it goes all back to the education component and you as an advisor developing your own opinion. So just because I say it's part digital gold, part long-term call option, that doesn't mean I'm right. And as an advisor, you need to do your research and understand it enough to say, hey, I think it is this, and here's how I put it into the portfolio. And I think that's where the true answer is for every individual advisor.
Yeah. And Bitcoin is such a tricky thing because it's unlike anything we've ever seen before. It's like you say, it's only been around since like 2009, and we can't put it in a bucket and say, it's not a stock, it's not a bond. Is it a collectible? Is it like collecting rare baseball cards, or collecting hot rod cars from the 1970s? There's a limited supply. And so that's why I think a lot of people compare it to this digital gold narrative, because we understand what gold is. It's been around for thousands of years. We understand the properties of it. We understand how it's gone up in value over time. And so we think Bitcoin has similar properties, but again, in a digital way and in many ways superior to what gold is. So we can make that analogy. That seems to make sense. And then as I talk to other folks too, there's this idea that if we are going to allocate to Bitcoin, what part of an existing portfolio is it going to come out of? And what I'm hearing people say is it's going to come out of your equity sleeve. It's going to come out of the aggressive part of your equity sleeve, or it might come out of a private equity part of your sleeve there. So it's clearly a speculative type investment. So do you have some thoughts on if someone is going to allocate two parts? One is like, of course, it's going to differ, but maybe a range of percentage of allocation. And then second, what sleeve, what part of the portfolio should it replace?
I think you're going to see a lot of advisors throw it into the alts space, which I think that's an appropriate place for it to fall in, because that's where gold would go. If you stick with the digital gold, it'd fall into the alternative investments. So I think that it's interesting. So Wisdom Tree actually has a couple model portfolios that they've put together, and we're partnering with them at Onramp to kind of facilitate that. And they actually have one model where they pull it from the equity, which to me, that makes sense because of volatility. When I think of constructing a portfolio and the ride the client's going to experience, to me, it makes sense to throw it in with the equities because of what they're going to see. So one of their portfolios, it comes from the equity side, but one of the other ones, it actually comes from the fixed income side. And part of the argument to the fixed income side is if we believe that fixed income is not going to do very well over the long term, and if we believe that crypto will have a maybe not perfectly inverse relationship to our equity portfolio, but if it has a diversification factor that if stocks do poorly, crypto may do better, then it could kind of fall into that fixed income side and maybe pull up the fixed income returns. I'm not quite comfortable doing that yet. I think I would still pull it from the equity side of the portfolio. I would pull it from the more aggressive side, maybe the small cap allocation, or depending on how the portfolio is structured, maybe I just carve a little bit of large cap to not lose that small cap premium that I subscribe to. But I do think equity makes sense. But I understood the argument of pulling it from the fixed income side as well. How much to allocate? Me personally, I would be comfortable with no more than 5% allocation for a client. Again, going back to checking their risk tolerance. Do they really have the risk tolerance for it? Maybe updating the IPS to reflect that. But going beyond that, even though I am a believer and I have shifted part of my career to work in the space, I'm still aware that it is new and we're learning a lot of new things there, and there are risks that are there. And as much as I love the space and I'm excited about things are going on, I also believe that my clients will reach their goals if we have zero allocation to Bitcoin. I believe my clients will reach their goals if we stick to a traditional diversified low-cost portfolio and spend our time focusing on behaviors and making good financial decisions, that they'll still reach their goals without it. I don't think Bitcoin fixes somebody's portfolio and fixes their plan. But do I want to omit it for clients that might want it? No. So I'm not a Bitcoin maxi. I'm a Bitcoin believer. I want to have it in the portfolio for those that are interested, but I'm not going to jam it in somebody's portfolio just because I think they should have it. Because again, with the risks and the things that come along with it, the volatility, I don't want to put something in my client's portfolio that's going to make them panic and force me to sell something at the worst time. And Bitcoin and other crypto assets have those characteristics. So again, going back to my ultimate job as a financial advisor is to make sure my clients reach their goals without forcing my opinions and beliefs on them. So if they're not a crypto believer, they don't want to have it, we can still have successful financial plans without incorporating Bitcoin into it. And I don't want to force it in there.
What would you say to an advisor who says, well, gosh, if I only put 1 or 2% in the portfolio, I got to spend all this time learning about it. And what happens if it doesn't work out very well? I've taken a lot of risk for not a lot of return. What would you say to that person?
I would say if it's only 1 or 2%, I don't think you're taking that much risk. And if you go in and play with the tools, again, I know it's backwards looking, but if you go in there and look at it, even a 1% or 2% allocation to Bitcoin would have given you a little bit better performance and surprisingly would have reduced the risk. You would have had a better risk adjusted return with just a small allocation to Bitcoin. Now, is that opportunity gone because that went from infant stage up to 60,000? Maybe. But if you believe anything, the numbers that are out there, what people think Bitcoin could get to, it's still very early on. I think it could still have that same risk adjusted effect on the portfolio. So I don't think a small amount is giving you a huge risk to the downside. And I think it does have some positive return. I think the risk reward on a small amount is worth it. Again, I think it all goes back to the client is comfortable with it. If the client's comfortable with it, it fits into their plan. I think the risk reward is not tilted to the risk side. I think the reward outweighs the risk.
Let's say that I am an associate advisor in a firm and I'm very much an advocate for Bitcoin and crypto. Yet the partner, the owner of my firm, thinks it's terrible, what would you suggest to that advisor to have a rational, reasonable conversation with their boss, with the owner, with the partner, to try and make them more open and receptive to making Bitcoin or crypto available through their firm?
I would first think, do I want to work at this firm? If I'm kind of kidding, but not.
Yeah.
But if you're going to stay at the firm, if you're not in a position to go launch your own firm and kind of have more control, I would lead with education. I would come to the partner and say, hey, this crypto space is not going anywhere. And we can look at the number of accounts that Coinbase has and how many people have crypto, and how much is held away from advisors. I would say for the longevity of our firm, we need to be able to at least have conversations with our clients about this space. So I'll be the expert. I'll spend the time getting the CDAA, learning about crypto to be the person who can talk about it intelligently to clients. And if we talk about it and we let clients know that we are educated in this space, I bet we'll have clients that will reach out to us telling us that they have it. And now we get to look around the corner and see more and learn more about our clients. So I would talk about, if I'm a junior advisor or an associate, I would talk about the longevity of the company, because what I think is going to happen is you're going to see more and more crypto find its way into the financial advisor relationship because of this transfer of wealth that's going to be happening in the coming years. You're going to have the boomers passing away and their assets and their wealth flowing to younger generations that are living and growing up in a digital age, that are going to want to be investing in crypto. And that's beyond Bitcoin. They're going to want to be doing NFTs and, ETH and Solana and Cardano and all these coins. They might even want to do Doge. And, we may not want to do that as advisors, but we need to at least be able to talk about it. So I think that the days of dismissing crypto and chalking it up as something that's not going to be around for the future are gone. So I would really just hammer home to the partner that we need to be able to talk about it. We need to be able to be educated about it and field these questions, and maybe even be able to advise from a held away standpoint of, all right, Mr. and Mrs. Client, you have $1 million of Bitcoin now. We need to reallocate some of that to your traditional investments. We're not going to tell you to sell it all, but you are too heavyweight into Bitcoin. And we would be telling you the same thing if we found out you had $1 million of Apple or Tesla. And I think if you just start off with that and you let those partners kind of ease into the space, again, I think the journey will be the same for everybody. You learn, you get comfortable, you see the possibilities, and then you start to implement it a little bit more. But I also think if your firm never goes beyond education, talking about it, and minor, tax planning, estate planning, and reallocation or rebalancing, and that's all you ever do with the space, I think you will get a lot of business that comes in and you will do a great job for your advisor. So I don't think you have to get to the point where you're allocating. And I'm also not so sure that every crypto advisor wants their advisor managing their crypto for them. They might want advice on it. They might want to know when they need to sell it, or if they have a big purchase to make, do they sell their Bitcoin or do they sell their mutual fund or ETF? And that's where the advisor can guide this. So that your clients may always hold it away, but you're going to get clients who need help with that, and they want an advisor who will know it and be able to advise on it, but not say, hey, you have to bring it to me. So maybe the advisory business in the future is less about advisors allocating 1 or 2%, but clients who've held it on their own and have amassed this wealth, you're advising them on how to manage that as a part of their overall financial plan.
Yeah, I think that last thing you said, there's a real key point in that. Even if the advisor is not buying or allocating into Bitcoin or other coins on behalf of the client, a lot of people are going to own it. And so you do have to have that education. You do have to be able to be in a position to know, well, how does this portion of my client's held away portfolio fit into their financial plan and fit into their retirement plan? So if for no other reason, that alone, I think should compel a financial advisor to really get schooled on this, because a lot of your clients today and in the future are going to own this stuff, and you better be able to have a reasonable conversation and understand how that fits into the portfolio, which I think is a good segue here into Onramp, because Onramp, I think, can help with that. And so first of all, tell me about what Onramp is, because I think there's a little confusion out there in the marketplace about what exactly does Onramp do.
Yeah, so Onramp Invest is an integration platform as a service. So we know SaaS companies out there. We're an iPaaS is what we call it. And the goal and what we're building and what we're going to do is we're basically going to be the highway to the advisor workflow when it comes to crypto. So the integration part of it is we are integrating with CRMs and all-in-one portfolio solutions and your risk tolerance software. So we're going to take this crypto information from your clients and we're going to take it to everywhere that you're working in your financial planning relationships with your clients. So that's the connecting part of it. So right now we have an integration with Advizon, and I lucked out before. I've been an Advizon user for years and I had nothing to do with that integration. But I can go into Advizon and see anything that clients hold through Onramp, whether that is I have a Coinbase account that's linked, held away, that pulls through, or if I've opened an account at Gemini, I can see all of that information in Advizon right alongside all my TD Ameritrade information. I'll be able to open accounts from inside Advizon, rebalance from Advizon. So I'll never actually have to leave my workflow to do what I need to do with the crypto. So the big thing again is taking crypto to all areas of the planning software. So hopefully in the future, we'll be in Orion and Black Diamond and Advizon. You'll see us in Riskalyze. We'll be in Wealthbox and Redtail, and everywhere that advisors are working, we're piping that information to it. So that's kind of layer one of what we're doing. Layer two of it is providing that access. I mentioned earlier our acronym education. We talked about Onramp Academy. Access, providing the advisor the ability to see those held away accounts. So we're not advising, we're not trading, but we can see it. Client has a Coinbase account. They can link it up through Onramp. So the advisor, if they don't have Advizon today, can go to their Onramp dashboard and they can see their clients' Coinbase accounts. Right now it's Coinbase and Gemini that we integrate with on that capacity, but we're building out more. So in the future, MetaMask will be an option, ledgers and Trezors, the wallets will be able to see it as well. So wherever your clients are holding crypto, you'll be able to pull that in and see it. And then the final level of access is actually doing the trading. So Gemini and Prime Trust right now are the two crypto custodians that we have integrations with that you can actually open an account, digital account opening, send your client a link, they approve it, the account is open, no paperwork. And then you can go in and buy Bitcoin and ETH on behalf of your clients and manage it for them. And then from there, that's just the beginning. The goal is to bring in other areas of the DeFi space I mentioned earlier. There's companies like Compound and Aave out there that have cash management options to where we can get 4% yield. That's not any more risky than the money markets we're used to, but we can get better yield out in the DeFi space. So bringing those to the advisor portal. So maybe the advisor never gets into Bitcoin and ETH, but they want to have better money management options for their clients, and they use the Compound or Aave that we bring in the future. And then it's just continuing to add on to it, providing better opportunities for managing keys. So Casa is a company that we're talking to, and Casa is a place where you can have, we're familiar with two-factor authentication for kind of getting in, but they have multi-sig storage for Bitcoin, meaning you have to have 3 or 5 keys to access your Bitcoin. And it makes it a little bit more secure, but also makes it easier for estate planning. So for instance, that's where I have my Bitcoin, again, before joining Onramp. That way I moved it there when it got to an amount I felt was greater than I wanted to have floating out there in case something happened to me. My wife just needs 2 of 3 keys, which is my ledger, my phone, or Casa. Any 2 of those 3 will get her access to my Bitcoin. So if she can't find my magic password and find the other keys out there, she's got the ability to get in there. Having that as an option as well. The goal is to be the go-to place for advisors when it comes to crypto.
If we move out 10 years from now, and I know we can't predict the future, but just looking at the trajectory of what's happening, all the activity, all the innovation that's happening in the DeFi space, all the NFT stuff that we've got going on, the meme stocks and everything, where do you see all of this heading? I know that's a big question, but do you have a sense or a vision for the future of financial services in light of what is happening at the moment and the trajectory that we're on with all of this cryptocurrencies and DeFi things that are happening?
I think we're at the beginning of a changing of the guards, if you will. Again, going back to that wealth transfer. Now, I do think a lot of what we're seeing in the last couple of years will calm down. The meme stocks, the NFTs, they're not going to go away, but I don't think they're going to be as wild as they are today. And people will make as much money so quickly as they're doing today in the space. But I do see that these things will be around because the people who are going to control the wealth in the future, these are the things they've grown up with. This is what they're used to. You've got a generation that is digitally native, they have no interest in owning physical paintings. If we want to go the NFT route, digital paintings, as hard as it is for some of us to believe, they would much rather have that. And you look at like the crypto punks and the Bored Apes that are really, really popular right now, and the values of those are crazy. But that's showing you this new mindset of a new generation, that digital artwork, that community behind it, there's value to it. That's not going to change. I don't think that's going to change. Now, I think that our traditional investments, mutual funds, ETFs, individual securities, those will all be there. It's not going to be an either or, but I do think that this space is going to continue to grow, because the people who have the wealth, that's what they see value in. And at the end of the day, who are we to say that people don't find a Bored Ape more valuable than what they find buying some GM stock? Because markets are created by supply and demand and what people believe. And if that's their belief system and they're the ones who have the wealth, then that changes it. And then money will follow it. If people see that there's more wealth being generated in this crypto space than in the traditional space, people are going to move their money over there. Again, I don't think that goes away. I would never say that in 10, 15 years, we're all crypto investors, but I don't see this space slowing down. And I just see it becoming more and more popular. And one of the things that excites me about the space, that gives me more belief that it's not going anywhere, is the freedom that this crypto space and the DeFi space is bringing to just the individual. And I look at it from like the creator economy that we're seeing growing today. People who are creative are able to control and start businesses today easier than they ever were. I mean, it's never been easier to start a business. You can open up a Shopify store on your phone and never take control of the inventory and run a $100,000 a month business selling t-shirts and never touch it. Like that's been there the last few years. But when I look at what creators are able to do as far as creating this digital art or other digital type of businesses, and create a following and create a community behind that and create this wealth in this business. The example I love pointing out is Jack Butcher. He started a company called Visualize Value, and I'm a huge fan of his. And it started with just him doing these visualizations and taking complex ideas or quotes and putting it out there. But he's turned it into this huge NFT business that's just a part of what he's doing. But it is amazing what he's been able to do. And he's just continuing to build this business with NFTs being at the foundation of it now. And I don't know if everybody understands what these smart contracts are allowing these creators to do. But in the NFT world, when you create one of these new smart contracts, you can build in long-term royalties. So again, taking power from the big organizations that a lot of people are losing trust in, and especially the younger generation, they have even less trust. You think of a musician, they can release their music in the form of NFT and continue to get royalties from it greater than they would have at Spotify or Apple Music. Artists now, they create this digital art, they sell it, but every time that piece of art is sold again in the future, they get a percentage of that return in the future. So you think about the greatest artists of time, they sold their paintings for probably a decent amount, but they're selling tens of thousand X more than what they were before. And their family, or they never got a piece of that. It was the investors beyond. But today, these digital creators, they're going to get a piece of every sale in the future, and they can structure it for their family as well. That, to me, that's powerful. And that empowers a lot of people who may have been kept on the outside because they didn't have the means to start a business or control their IP like they can now. And that's what excites me. And I think that those businesses and those opportunities only fuel this crypto space and this digital space to continue to grow. And Bitcoin needs to be there, and ETH needs to be there, because that's what's allowing all of this to happen. So that, to me, that's what excites me. I think that all of that opportunity is what is a positive for Bitcoin and ETH and these other coins, is that if these things continue to grow, these business opportunities, then you need these coins and tokens for the network to run.
Yeah. And what's happening here with all of the crypto stuff is it's just like the latest manifestation of the continuing digitization of everything. And Mark Andreessen, I think it was 2011, talked about software is eating the world. Well, it's just continuing. And it's the digitization of all of this stuff, from the NFTs to the cryptocurrencies and so on. And we can't even imagine today. And I think you've done a really nice job of conceptualizing where this is going and where we might be in 5 or 10 years. But the things that creative people are going to come up with to satisfy desires and wants of human beings over the next few years, because of what technology is enabling us to do, is mind-boggling. I mean, we can't even fathom. I mean, who would have thought in 2007 that we would have this crypto economy that we have today that's worth over $2 trillion. I mean, no one was really talking about that, although people were working behind the scenes to try and come up with some of this stuff. But yeah, it's just, it's mind boggling. And I think your point early on is so spot on, this idea about we have to educate ourselves. And I think it's incumbent upon financial professionals. Part of your duty is to stay up to date with everything that's happening that could affect a client's financial situation. And I think the whole digital economy is certainly one of them. And so even if an advisor decides that crypto's not for me, that's totally fine. But you have to come to that conclusion after doing your homework, after doing your due diligence, and after doing your research, and be able to speak intelligently to your clients and prospects about it, because they're certainly getting up to speed with it. All right. Well, hey, I think we are bumping up to the top of the hour here. So if you could just share, Justin, what's the best way for folks to connect with you and connect with Onramp if they want to learn more about what you're doing there as well?
Yeah, it's all pretty easy. So we'll go Onramp first. Onrampinvest.com is the website, or academy.onrampinvest.com is the website for Academy. They'll both connect to each other. Social handles for those are their names: Onramp Invest, Onramp Academy. So you can find them on Twitter, and then LinkedIn. I'm now helping build the company, but Tyrone kind of got this company going, and the early teammates got it going on social media. So we're a very social company. And then my personal handle is just at Justin Castelli. So it's JUS10 Castelli, Castelli, or you can go to justincastelli.io, which links out to everything that I have and everywhere I'm hanging out. So yeah, it's definitely an exciting place. And the last thing I'll leave with is, you mentioned that it's a $2 trillion space, which is really actually small in the grand scheme of everything that's out there. It's also not a number that is so insignificant. But if crypto and Bitcoin is going to eat into these other spaces, there's a lot of growth for it to continue to go, to become a bigger player in all of the assets that are out there. So I still think it's really early on, and it's exciting, and it is table stakes. I think you made a good point that even if you come to the outcome that you don't believe that this is something your clients need to participate, or you don't believe in, I don't think you can just dismiss anymore. You have to articulate why you don't believe that. And you have to be able to show that you've educated yourself as an advisor. And then that's the result you came to. Just like you would if it was a REIT or an annuity or a stock or mutual fund, you have to be able to articulate why you believe it's not something your clients should be participating in. And just a straight dismissal is no longer acceptable. 2017, I think you could have got away with it, but clients want to know that you're staying up to date and you're doing your due diligence on what's going on. So that's where I think it's so important to develop your opinion and do it based off of research.
Outstanding. All right, Justin, well, appreciate it. And great to catch up with you here. And congratulations on what you're doing there at Onramp Invest and the RIA firm and the advisor growth community. You got a lot of things happening here. So congratulations on all of that.
Thank you very much.